Hey, what's going on, everybody? It's your boy. Your boy, Ben Humble on the Data and Drama Show. I'm so happy to be back here. Let's just jam it out for a second, though. I got some new samples. All right. You know, I got the rig. Me and man Davey, we in the back. We got new sounds up every day on this thing here. So hopefully you love the show, and I appreciate you guys for tuning in. We got quite a few people checking the show out in the last few days. Sarah, where are we at with the tally so far? Wow, that's a lot. It's in the thousands. My point is there's a lot of people checking out this show. I love it. Thanks for being here. Every day we're going to be bringing you some awesome stuff. We're talking about some things going on in the news, giving you some smart financial advice during this time. So there's some serious segments, some funny segments. If you love it, do me a solid. Come back every day at 5 o'clock. Give it a share. We got some cool stuff for you guys here. So let's get started. Today, we're talking about the volatility in the markets. What does it mean to be an investor in today's economic climate? What can you do to protect yourself, protect your portfolio? But before we get started, I told y'all what was happening last time. I told y'all whoever's going to share the stream, I'm going to be giving out some cash. So I've got a winner here, my man, Alex Solga. Dude, you got $200 cash coming at you. I don't know if I could put that in the envelope, guys, right? Is the mailman still open? E-transfer is open. E-transfer? All right. E-transfer is still open. We'll be sending you an e-transfer from Mr. Alex Soga. Congratulations, pal. Thanks for participating and showing up and being here. Amazing. Hey, another cool thing. If you guys want a chance to win today, here's what's going on. Matt McKeever and myself, we're going to be doing a private workshop diving into how exactly you can benefit from this market that's going on right now. So I know a lot of people are stressed. A lot of people are struggling. There's a lot of stuff in the media and the news that we're just conflicted with. And maybe we don't know what the best thing to do right now in our investment portfolio. So we're stuck. We're confused. We don't know if we should be buying stocks, buying options, selling real estate. What? I want to do a private, it's going to be a Zoom call. Yeah. Private Zoom call with you guys. All you need to do is this. Just share this stream right now before it's over. And I'm going to be sending you. Oh, look at that. It's creepy cousin Vinny. Show us the mustache, Vinny. Show us the mustache. And then we got creepy Dave in the back. But guys, all you need to do is just share the stream, and we're going to do this private call. Listen, in all seriousness, some of you guys need to spend time with some counsel and get some help and advice on what you can do in this market to benefit from it and just to protect yourself from the downside. So I'm excited to offer this free workshop with Matt and myself. And for those of you guys that really want to get going here, a lot of people ask me, hey, Ben, I know you're a wholesaler. You've done a lot of wholesaling. How do I get started in the Canadian market? Is there still good deals? Where do I find opportunities? Where do I get deals from? So guys, I put together a book that I was going to release next month, but in lieu of the show, I've decided to go ahead and just drop it right now. Now, fair warning, I do not have page numbers yet. I do not have everything finished just yet, but the book is here. I'm happy to share it with you guys. I'll drop you a free PDF. All you need to do is head over to humble.ceo, grab your free copy today, stay in contact with us in the show, and I'd love to help you guys make it happen right now in Canada. All right. Is this good? Is this good? All right. We're going to have some questions and stuff that we get to in a moment. But first of all, let me talk about my guest here. This dude is going to be my new partner every Monday now because he's such a brilliant dude. He's been through a lot of stuff that I've been through, my boy, Matt McKeever. If you guys don't know Matt real quick, dude's got over 50,000 subscribers on YouTube. There he is. Hey, Matthew. Oh, that's not the sound I wanted. I'm sorry, bro. I gave you the wrong sound. Let me. There you go. Matt McKeever joining live with me in studio. Hey, brother. How are you, man?
I'm doing good. Yourself, Ben?
I'm good. Thank you so much for showing up and being here with us. You know, people got a good vibe from you last time you were here. They're like, we like that guy because he's to the point. And I said, he is my exact opposite. We could not be further from each other, partially because I can't grow hair to save my life. Anywhere.
We make a good duo.
Yes, we do. We definitely make a good partnership here. So I'm glad to have you back. Thank you for joining us and bringing some clarity in the chaos, bringing some data to the drama. So what we're going to do is we're going to go over to our next segment. Watch this. All right. In this segment, we're going to talk about the 3 reasons to invest in real estate during a recession. Market volatility is pretty high. And I want to just quickly explain the difference between volatility. Somebody had a comment. Hey, what's the difference between volatility and liquidity? They're two different things. Volatility is the gauge. It's the difference in spread, how much it goes up and down. The liquidity is access to capital or access to cash. in any given situation. So there are two different things. We're talking about the volatility. As the market goes higher highs and lower lows, we're looking at opportunities within real estate, sometimes within stock market, but right now we're talking about real estate, buying in a potential recession. I'm saying potential for one simple reason, folks. I love you, but nobody knows exactly where the market is headed. A lot of people have guesses and opinions, and all of them are valid to an extent until it goes the opposite way. So the only thing we can truly do as mature real estate investors is look at the probability of something going right or wrong, and then just being in a state of preparation so that we don't get caught, with our pants down. So if you just look at the different potential outcomes, position yourself accordingly, that'll give you the highest possible success ratio that you can have, because anybody who's telling you one way or the other, nobody has a magic 8-ball. I'm just telling you that's the way I look at things. So Matt, let's jump into this, buddy. Property investments can produce a stable income. These are 3 reasons why investing in a recession. So you have some rental properties, you've got some passive income, right? Why is it important that you have additional income streams right now? Or why is it important that you're investing in passive income streams?
Yeah, so I think one of the big things when people are looking at real estate versus, say, any other asset class is oftentimes they ignore the fact that we have a lot more direct control over real estate. And so because of that, we're much more in control of that passive income than we would be with other types of assets. So when I invest in dividend paying stocks or REITs that are doing regular disbursements, I can't actually really control whether they continue to pay dividends or whether they decide to turn that off in times of, financial uncertainty or just problems in their business model. Whereas a real estate investor, we can often pivot. And, if things aren't going well with this one strategy, we can actually have direct influence and control over the asset and pivot and try and produce income another route. Where again, with paper assets, unless we have significant control, unless you've got 10% or more ownership in that company, realistically, we're not going to be able to direct how that company, say, pays out the passive income.
So let me ask you this, dude, because with property investments, there's this old biblical term that the borrower is slave to the lender, right? In a way. So the person there's 2 sides of this equation. You're either a lender, a landlord, somebody on the receiving end, or you're on the other end, which you're always giving or you're borrowing from another party. As a private lender in this economy, for me, knowing that I'm in a position where people owe me is a far greater position to be in than me owing them, right? So same as being a landlord, right? You're in a position where people owe you. Now, it may be harder to collect, it may be more difficulty, other issues and variables, but owning passive assets in this economy, you're on the advantage side versus the disadvantage side. So would you speak to that for a moment from being in different perspectives? Because I think now it's more obvious than ever, who's actually stuck with their pants down, speaking, who's borrowed more than they should, and who's actually built a real business that produces value where other people haven't. So speak to that if you could, please, man.
Absolutely. So during, these times of uncertainty and volatility, again, if we were investing for fundamentals and not investing, based upon the greater fool theory, which is simply buying something and hoping someday someone will come along and pay more for that than yourself. Yeah, that's my opinion of the greater fool theory for sure.
Can you just real quick, can you just clarify what that is? So just please touch on that real quick, because some people don't know what that means.
Yeah, so really the greater fool theory is just as it sounds. In essence, your investment strategy is based around finding a greater fool. So if I buy something in the hopes that it goes up, but I don't really have any control or influence over it, and my only exit strategy with that item or with that investment is that someone else, a greater fool, will come along and pay me more for it. Well, under that circumstance, I don't actually have a lot of control over the asset. The way that if I was investing based upon fundamentals like cash flowing rental properties, I actually do have a lot more exit strategies available to me and other ways to profit from that investment.
So would that mean, though, so in that case, would you consider that speculation? Because in my mind, that's what it sounds like. It sounds like if you're relying on somebody else to buy that investment off of you, whether it's a stock, whether it's a piece of real estate, you're speculating on the direction in the market. Am I right here or what?
Yeah, absolutely.
Okay. So what you're saying is the greater fool theory is basically speculation. You don't speculate. You buy on fundamentals. You buy a long-term asset you're prepared to hold. You're basically the Canadian version of Warren Buffett.
Yeah, like that's the overall goal and purpose of what we're doing, right? Is investing on fundamentals that, where there's a real business case there. A lot of times when people are speculating or going down the greater fool rabbit hole, they're not. And so they don't really have a business model other than, well, I hope someday someone will pay me more.
Business model, I hope, is probably not the best one. In fact, it may lead to some explosions. Well, cool. I think that's very important to understand the difference between passive and active investment vehicles, and the fact that we're talking about stable income in a time of instability. The next topic here is real estate may be less sensitive to volatility than other asset classes. This going to be more true than right now. If you notice, some of the major indexes are dropping 30, 40, 50%. Some of the stocks are dropping. Some actual stocks have become penny stocks in the last couple of weeks during this massive volatile time. Even though we might feel this in the real estate market, real estate is a lagging indicator. It's going to follow other venues, other vehicles out there. So this is when being in a safe vehicle is so important. That's why so much money is floating to real estate. So do you see an increased interest in real estate, or do you see people in real estate having perhaps more confidence during a market like this versus people that are in stocks, bonds, and mutual funds?
Yeah, that's a great question. So right now we're very focused on the data. So we're spending a lot of time really reviewing the data. So literally earlier today.
Sorry, focused on the what?
The data.
Okay.
Gotcha. Okay, not drama, right?
Exactly.
Gotcha.
And so today we had a realtor, Jeff Weibel, who's a good friend and business partner of mine, pull all the sales again from Saturday and Sunday this weekend so we could see what happened in the market.
Okay.
And right now, based on Southwestern Ontario, properties are still selling for above asking. The vast majority, I think there was maybe 2-3 examples total where they either sold at asking or below asking. I've got anecdotal stories of people moving from stocks and bonds and paper assets into real estate. Now, all that being said, again, this is definitely a day-by-day process. So that's where being really dialed into the data and understanding it is so important, in my opinion.
Okay.
Because, again, a lot of people are just, like you mentioned, like reacting based upon that drama and things of that nature. So in general, with real estate, because the same reason some stock investors will knock it is the same reason it's less responsive to volatility, which is it's a little bit more illiquid. So if all of a sudden I'm panicking today, I literally can't transact in real estate the same day. I can sign that purchase and sale agreement and I can submit it to my lawyer and things of that nature, but I literally can't sell it and receive funds for it same day.
But isn't that a protective hedge against our own emotional insecurities? Really, though?
Yeah,
I think the fact that you can't pull the trigger
argument for that. Yeah,
like let's talk about that. The fact that you can't pull the trigger as quickly as the stock guys can means that you're not going to be able to exit a race based on emotion when you should be probably sticking in to see what the true data says. Because right now, a lot of it is drama, folks. We understand that with the market dropping so significantly, it's not based on data. There's no necessarily a massive housing shortages or issues, or there's no real stock data on individual companies with massive drop in earnings, because that data really hasn't happened yet. We've got a week or two of prospective data that is going to be forecasted into future earnings. And as a result of those potential future earnings, the probability of it being lower is significant. So as a result, the stocks trade lower. But the question for you then, my friend, is this. In real estate, even though there's going to be the same kind of internal pressure, like what's going to happen with tenants not paying and things like that, it's still less significant than being in any other asset class. Are you agree with that, or you disagree?
Do you want to restate the thesis there, just so
yes,
I'm sure?
I sure shall. I have a tendency to speak in circles. That's why I run the show. My point is, I would say that the real estate market is a better hedge against other asset classes, because you can't pull the trigger as quickly to exit it, which means that you're typically in there for a longer period, which means that in periods of high volatility, you're going to be less likely to exit that investment vehicle. You're going to stick within it until the markets calm down and have a little bit more clarity, versus other markets or other classes of investments like stocks and bonds, whatever. You can pull the trigger in a heartbeat based on a CNBC or Fox News. But those stocks also drop faster in value than the value of real estate, at least in any measurable way that we can evaluate. Like, we can't look at real estate and say, my asset is worth 50% less. But we can directly look at the value of a stock based on its trading price and indicate that the overall market cap, has been cut in half. Yeah. So I think there's more stability is the point I'm trying to make. I just wanted to get your take on that.
Yeah, so absolutely agree. Real estate's always lagging the paper markets. And so that's actually a good thing, because one, it sometimes can telegraph movements for us as real estate investors. And so we can more quickly adapt, and we can adapt during the market with the market, whereas often paper assets and investors in stocks and bonds, they have to be more reactive to that situation because it's such real time. So again, yes, one of the reasons that I like real estate is the fact that it's mildly illiquid, which means like during times of extreme volatility, like we're experiencing now, that panic doesn't set in right away. And in fact, oftentimes, if it turns out to be not a severe situation, if it's making a mountain out of a molehill, then we can often just kind of breeze through that as real estate investors. Whereas paper assets, again, you're more often going to see those massive drops in a single day. Where with real estate, as long as there's still people open and willing to transact and bid, we're not going to see that race to the bottom quite as fast.
Good. I appreciate that that input, because I think it's valuable. Now, I'm not saying it's not going to drop, folks. Just to be clear, I'm not making any kind of prediction that it's going to be a certain point or drop more or drop less. All I'm saying is, historically speaking, the real estate market is going to be more stable than other more volatile asset classes, which tend to overreact, and you can see the discrepancy in price a lot faster. I'm not saying that there's not going to be more deal opportunities. In fact, I do think there's going to be some real estate following, but I think real estate's an amazing vehicle because you can kind of have a little bit of a probability analysis, because when I see the rest of the markets tanking, real estate's going to be behind them, not ahead of them. So it may be a month, it may be a week, it might be a year. Do I think it's going to affect? Yes. To what extent? Truthfully, folks, nobody really knows. My show is more about being prepared for multiple outcomes, not trying to predict a specific one. And if you get that about the show, then you can take the information, apply it to your own situation, and hopefully help you hedge during this time. So that's a great segment. Let's hop over to the next segment here real quick. We can get going on this piece here. Here we go. Look at that. It's pretty good. We're getting good at this. Okay, let's talk about this Canadian landlord's rent deferral. This is a hot topic. I see a lot of stuff in the comments here about folks that are afraid or unwilling, or let's talk about the real consequences or the perceived consequences of not making your actual payments in terms of rents, landlords, etc. So let's go to this topic here. Coronavirus calls to suspend rent in Toronto. This gets louder and louder. The growing number of Toronto tenants calling for rent freeze as the big banks put a mortgage payments on hold. Can we get a little bit of clarity here, folks? Matt, can we get a little bit of wisdom in this time? I just want to preface with one thing, and I want you to jump into this topic. There is always a pendulum in life, my friends. When the pendulum goes this way, we look at the necessary benefits on one side, but we don't see the negatives or the consequences on another. No government can intercede. No government can fix this problem. Whatever measures are taken are proactive measures to try to put a Band-Aid on it, but there has to be a consequence somewhere. We live in a world sometimes where the government's going to provide for everybody and it's just going to be okay. But you have to understand that whoever's taking proactive measures, somewhere else it needs to cost something. It may come in the form of higher taxes later. It may come in the form of additional things happening, but it's not just going to go away. I don't think it's going to be possible for the government to come in with millions, billions of dollars of stimulus in Canada and the US, and then we're not going to see that consequence 6 months, a year, or 2 years from now. So Matt, let's talk about, is it really in somebody's best interest to not pay their rent? Let's really talk about this, even though at the moment, Landlord-Tenant Board Court in Ontario is not proceeding with any legal evictions. Is it really in people's best interest? Let's get some clarity on this, please.
Yeah, so first things first, there's a lot of misinformation and half-truths in regards to what's going on with rent deferrals, mortgage deferrals, things of that nature.
Let's clarify, because that's why I wanted you on the show, because you're a level-headed investor and you understand this from all angles, and you are not. I think you're pretty bipartisan in my mind. So please give us the pros and cons here.
Appreciate that. So when I'm looking at it, one, it's unfortunate the narrative the government has been putting out where we've got politicians making statements without plans. So literally that's creating a lot of confusion in the market, right? So when we've got people like Prime Minister Trudeau or Premier Ford talking about, no one should have to pay rent or people shouldn't have to choose between food and rent, it creates a lot of uncertainty in the market. And
division. Division, right?
You understand what I'm saying?
And so with that being said, I think it's important for us to take a step back and look at what's the realistic scenarios here.
Yeah.
And so again, one, if we've been treating our tenants like a customer rather than just being extremely transactional with them, hopefully there's some give and take to that relationship. Now, that being said, I think it would be naive for all landlords to just assume they're going to collect all their rents April 1st exactly on time. Mm-hmm. But because of the extreme volatility and the unusual times that we find ourselves in, I personally suspect that before the end of this week, we'll get some more clarity from government officials. But even if we don't, I expect that at some point they're going to have to step in and provide clarity and likely some support, the same way they are doing for people with mortgages, the same way they're doing with EI. So like at this point in time, if we look to the US as any guide, like they've essentially decided that like no amount of money is too much to try and stimulate the economy. And often how the US, how the US marches is how a lot of the rest of the world has to fall in step. So overall, I suspect that we'll get some sort of guidance from the government, and at the end of the day, some support if we see mass amounts of people unable to pay their rent. Now, again, as a business best practice, we should already be keeping some reserve, some liquidity as business owners. So if you find yourself in a situation where you can't literally weather 1 month or a couple months delay, which I think is plausible, at least in this current environment, where we might have to wait a while before we get that stimulus or that support from the government. So as long as you can weather that initial turbulence and uncertainty, I suspect that most landlords are going to work out because, again, we are still at all-time low vacancy rates. We're still, at least in Southwestern Ontario, our affordability indicates that it's still within line because the average person on minimum wage can afford to actually rent, a lot of the apartments that we currently have and that a lot of the landlords I know currently have as well. So again, it's important that we walk through this entire thought process cool, collected, and calmly. And it is unfortunate, like you mentioned, Ben, the division that's being put where it's like tenants versus landlords, that sort of division, in my opinion, doesn't do anyone any favors and doesn't help solve the issues in any way. So again, if I was a landlord, I think your best practices here are to prepare to have some cash crunches. And so if you already got some liquidity, great. If you got some line of credits as emergency funds, this is probably the time to draw on those emergency funds and just keep a bit of a cash reserve so that you can weather any short-term storm that comes along. But then finally, again, let's start treating our tenants, if we haven't been already, like customers and start building real relationships with them. And hopefully we can work together with them in order to find some solutions. But, it is unprecedented times. So I think it's important people be looking at the realistic worst case scenario rather than the absolute doom and gloom, society is going to crumble.
Dude, there is so much to unpack there. Probably enough for an entire segment here, but let's just talk really quickly about common sense. As much as we're all trying to predict the future, we're all trying to figure out what to do, we're all trying to look at government, let's look at the probabilities here as just a small business owner, regardless of who's going to do what, who's going to intervene, what money comes out. You as a small business owner, if you're a landlord and if you're a small landlord between, let's say 1 and 15, 20 properties there, this is a business, folks. And nobody really wants to have the consequence of owning a business while at the same time recognizing that if it was any other business and you had a fruit market and the fruit spoiled, I don't think anybody's coming in to bail you out. We are in a business, folks, and it's more important than ever to have some available liquidity. So if we've been running too close to the edge, the question is, what can we do right now to stop the bleeding and get back in the hedge against this position? Dude, a lot of landlords just get stuck because they are playing too tight. They pay too much for the real estate. Yep. They're razor thin on the margins. Folks, I'm going to be very blunt here. When I see people buying multifamily apartment buildings at a 4 and a 5 cap for the last year and a half, and then now we're going to look at, oh my God, my tenants won't pay. Listen, you overpaid. You only bought real estate because everybody else did. There's no feasible reason why somebody should buy real estate at a 4 or 5 cap rate other than you're trying to move money from another country, which we've seen a lot of foreign money coming into Canada, primarily out of China, right? They're buying up a lot of our real estate, which is tying us up. So that's the issue we have here, folks, is that there is a consequence somewhere. So moving on with this, there's a whole bunch of stuff here. Same with landlords, right? Landlords looking for deferral. There's got to be some kind of consequence to you not paying that, for you asking for that deferral right now. It's not just going to go away. It's not just going to like all of a sudden be there when you need it. There's going to be a problem or a consequence. Would you touch on that real quick?
Yeah. So absolutely. We can't live in a society that has no consequences, right? So while we see the government's creating a lot of stimulus, a lot of financial, bailouts and things of that nature, and just unprecedented injections of liquidity into the market, at the end of the day, there has to be consequences there. So it may take a while, it may be deferred, but either the government or the individuals will need to step in, because I don't think that the government's going to want to see a massive real estate crash where just literally no landlord gets paid, tenants and landlords start going to war with each other and the entire system starts falling apart. So again, realistically, I think we need to take a step back and think through not just the lens of landlords, not just the lens of tenants, but also the politicians. Because at the end of the day, the politicians, they still are going to have to run for re-election, whether it be this fall, next fall, or a decade from now. And with all that in mind, it really is going to be in everyone's best interest to try and smooth this out the same way that people are trying to flatten the curve in regards to the actual virus spread, or spread, I should say. I think we're going to see people trying to flatten the curve of the economic impact. And so we've already got that with the government stepping in with stimulus, with the new EI rules, especially here in Ontario, and then also with at least the potential of some sort of support or subsidy. But again, like we're not going to fall into a society where all of a sudden debts don't matter and literally it just doesn't seem practical.
Yeah, we can't. It just doesn't work that way. There's going to be a consequence somewhere. So let's talk about that real quick, then we'll jump on to the next segment here.
I got a quick question.
Oh, we got a quick question from the audience. Here we go. All right.
Actually, with reserves for 3 to 6 months for payments, is it better to use those versus
Okay, so that's the question.
So here's Brooke Johnson's question. With reserves for 3 to 6 months for payments, is it still better to use those versus a deferral?
What do you think? I can tell you my answer, but you go first.
Sure. So my opinion is that it certainly makes sense to try and stay as liquid as possible. So in general, my advice to landlords likely would be, if there's a deferral available and you think the consequences are likely minimalized to, taking that deferral, I think you're best off to do that. Same with like even in personal finances, I think it's intelligent for people to want to reduce their personal burn rate in these times. So I don't see a big.
Can you clarify what a burn rate is for people, please?
Yeah.
Clarify that. That's big.
Yeah. So your personal spending rate. So right now, if you currently don't know what you spend in a given month, this is the time to sit down and figure out what you are spending on a month. This is definitely the time to start budgeting. And also not just like budgeting in theory, but also really looking at cash flow management. So this is something big corporations do all the time, where they project their cash flows as well as their cash requirements to make sure that they can smooth out during any times where liquidity or credits crunch, things of that nature. So again, as an individual, as a landlord, as a business owner, it's really important, in my opinion, that we all look at where exactly we stand and figure out what steps we can do to minimize our cash outflows in times of uncertainty, just so that we can stay as liquid as possible should things deteriorate further, or on the flip side, should opportunities become available and we want to take advantage of them.
Dude. So what you're saying is tighten the belt. We got to stop spending excessively. Right now is the moment for you to go back to rice and beans. If you're not you actually like rice and beans, right? You eat a lot of it. He loves it. He's just, it's his food. So, my point is like going back and tightening the belt, because listen, if you take a mortgage deferral, if you take that as a potential property owner, investment owner, assuming that's even available to you, because I'm getting mixed information out of different provinces, but assuming that it's even available to you, if you take it, you can't go back 3 months from now and say, I don't want to take it. Right? Like you've already taken it. So if they come back with fees, they come back with different items, they come back with stuff, you got to be willing to take on those consequences. This is no different in my mind than borrowing it on a credit card. I can't afford right now, or I choose not to afford right now to make these payments. So I want somebody else to bail me out for 2 or 3 months. See, I think some people have this idea that for whatever reason, the government's going to bail out everybody down the chain. So the tenant doesn't pay, the landlord doesn't pay, the bank doesn't pay, the government just pays for everybody. Folks, I'm going to be honest with you. The probability of what you're saying is actually communism. Just want you to understand that. Like, we want to live in this society. We want to live in a society that's free and everybody's got rights, everybody's got whatever. The more you want governments to step in, the more you want responsibility on that level, the more they're going to take responsibility, but the less rights you're going to have, even though you think you might have more. Let's go on to the next section. There's quite a bit here we covered. Consumers could face hit to credit scores, jump in payments. There it is. There it is. So here's an account that came out. Deferrals actually meant interest incurred by the deferred payment were being added back to the principal, and the back mortgage said the source. Technically, clients would then be charged interest on top of interest for those payments that were just deferred. In effect, it's as though the bank is loaning you the amount that you would have to pay in interest during the deferral period and then charging you interest on that loan as well. Folks, people who are lenders will always be lenders. So even though you might be getting some kind of stipend or whatever at this point, or deferral or leniency, that doesn't mean that you're not paying for it somewhere else. So as long as you recognize that, Matt, I think people can do what they want to do. Just know you're going to pay for it somewhere. And if it happens to be a higher property tax or higher personal income tax, I just don't think we're getting out of this with nothing, right? So I think as an individual, it's smart for you folks to really identify Do you actually need a deferral? And if you don't, personally, I would suggest you just stay where you're at and just make your payments as normal. If you're in a situation where it's an absolute necessity and you can't eat, fine, I understand the consequences. It's like borrowing on a credit card at a high interest rate. But just keep in mind that if you just think it's free money, I don't think that's the actual purpose of it. Matt, anything last thing you want to add before we go on?
The only thing I would add is I personally would take a different perspective on that. It's definitely not free money, but I think in times of uncertainty, having access to more liquidity is a smart business play in general. So I think that personally, most landlords and most property owners will be better served taking that deferral than not, even if there are cost consequences associated.
Okay, cool. So now we're going down something interesting. So let's clarify this. If you have one rental property and we're talking about a $400 a month payment or $600 or $1,000, I don't think an extra $600 a month, $1,200 or $1,500 is going to make a big difference in your balance sheet being able to purchase another property in terms of liquidity. If you have a lot of rental properties and it's a matter of you being able to buy more distressed assets as a result of you saving onto your cash. So I think there's a fine line. It depends. So it depends on how much you're actually putting back in the bank. What I don't like to do is paint things with the broad brush. I'm sure neither do you, because then we get into a difficult territory where there's no real finite right and wrong. A lot of it comes down to it depends. So that's why I appreciate having your conversation out here, because you help me think about things even I don't think about. Moving on. I love doing this. Okay, let's go to the charts here real quick as we identify what's going on in the market. So we talk about the VIX on a regular basis here. The VIX is the volatility index. So I'm gauging this every day. And somebody said to me, well, isn't this only for stocks? This is a fear indicator. This is what helps us understand how the typical equity, the index markets are going to move. So by understanding the VIX, you're going to understand a little bit of what's going on in the fear-driven society and the panic as it relates to the financial markets. Today, we've actually got, we've got a little bit of a pullback. We've got a little bit of a neutral, stagnant at 54. The last 3 days have been a little bit even. This thing is trading historically at 10 to 20. So the fact that we're up at 50, think about that. There's still a lot of fear in this marketplace. We're going to keep track on the VIX as a regular item here on the show, because I think it's important that we understand where the fear in the market is. This is also what gets used to price and option premiums as part of it as well. So for those of you guys looking to trade stock, may or may not be a good time to do that. I'm not going to advise you one way or the other. I think you should trade in things that you understand intelligently and that you know how to understand the downside risk. That being said, if we look at the overall S&P, it's down. Look at this big movement over the last few days, folks. So it's still dropping. So, I've got this probability. I'm not going to say prediction anymore ever again. I'm going to say probability. The probability of it continuing to go lower, and this being the first wave of another wave, is likely, because I think when the earnings of those companies finally come out, it's going to affect other things. Now, here's the thing where people get a little bit caught off guard. They say, well, Ben, isn't this only stocks? My question to you is, are there not home builders that are publicly traded? Are there not other companies that are directly tied to the stock market, tied to a price of a company's product, tied to the fact that Home Depot is a publicly traded company, yet they shut doors? Are we not tied to those things anyways? So I'm just using this as a leading indicator to try to understand what's going on in the market so I can position myself as an individual investor. I don't think this show is about speculation. It's about reflection on what we can do, as an individual to better our situation and to prepare ourselves in any given situation. So Matt, how does this correlate? How does this tie in with you here, pal? In terms of the stock market, are you guys tracking it at all? Does it mean anything to you? What are you doing in relation to this?
Yeah, so certainly paying attention to what's going on in the stock market is absolutely important for a real estate investor, especially an investor with a large portfolio. So we certainly pay attention to what's going on, when circuit breakers are hit, things of that nature, as well as just looking at, the futures and things of that over the weekend. So yeah, I think it's very important that any landlord or real estate investor that's operating where this is your full-time gig, you certainly need to be staying informed about what's going on in the greater general economy and specifically with the stock market as well. And like Ben mentioned, again, it's not like the two markets are completely isolated from each other. What goes on in the stock market does have consequences in regards to what goes on in real estate for a multitude of different factors. And we could run through all of them, but I definitely encourage real estate investors and landlords to be paying attention to what's going on in the stock market.
I love it, dude. Pay attention, stay focused, stay committed. And if you guys want some help with understanding one of these strategies in Canada, which is wholesaling, We put this book together for you guys. Check it out, humble.ceo, to grab a copy of this book. And we've got some cool stuff in store, so check that out. We're going to go on to the next segment, which I know Matt truly does enjoy a lot. So, Matt, are you ready for a little bit of halftime? By the way, this is pee music. If you need to pee, this is a good time to do this. If you want some love and entertainment, some positive vibes, Hans, do the music, yeah? Here we go. Yo, give me that track. Yo, give me the beat. Hey, hey. COVID-19, yeah, COVID-19. Your boy bringing faith to the obscene. I'm running all my businesses, yeah, tight and lean. I'm stacking paper, but my toilet stay clean. The Canadian advantage when the media is rampant, but your confidence is tempered. I'm still hugging like Pampers. Don't defer to payments, defer to madness. I'm just one man shutting down coronavirus. I got this for you, McKeever. Let's freestyle. Here we go. McKeever's a believer. I'm dope as Bieber. While my hair's a little thinner, I'm eating fat steaks for dinner. Retired CPA, doing real estate all day. Matt's crushing YouTube in every single way. Hey! What? Oh, what? Oh, yeah, what? Oh, what? Oh, what?
Love it, Dan.
Okay. Yeah. A little bit of entertainment for you guys here today. Hope you guys enjoyed that dance vibe. Threw a little bit in there for my boy McKeever. What you think about that CPA line? Retired CPA,
That's
doing
good.
it all day. Matt's crushing YouTube and every single way. Dude, I love hanging out with you, man. This is a lot of fun. Guys, you got to have a little bit of fun in life. My first rule of business is enjoy yourself, have fun. When I think you do, it keeps you excited, keeps you entertained, and keeps you rolling even when times get hard. Let's jump over to the Daily Dog News, which I know Matt really enjoys this topic as well. All right, in Daily Dog News, the first thing I want to let you know is that drones are now walking dogs. As a result of COVID-19, people are not leaving their house to walk their dogs. So they're utilizing the effect of drones to walk their dogs in their neighborhood. Look at this little Pomeranian, excited, so happy. By the way, question, how did that car get on that sidewalk? That's what I'm trying to figure out. Like, who put that car there? All right, dude, that there is funny. That's funny right there. All right, another dog news. Dogs are taking over humans. Absolute rascals are breaking every rule and doing whatever they want to do at every dog show. Look at this little guy right here. Do your thing. Here we go. Show us. Oh, yeah. He literally grabbed the bar. He grabbed the bar, broke all the, look at him. He's just messing around. Look at this guy. Owner cannot take, dude, I can't take you anywhere, Rufus. Rufus, you shih tzu. I can't take you anywhere. All right. Let's get back to the show. All right, so joke of the day real quick. Matt, maybe you know the answer to this joke here. All right, guys, by the way, I didn't make up these jokes. So if they offend you, please do not send me a letter about it because I did not write them. But do you know what they're saying about 2020?
I don't.
Does anybody know? You guys know in the back what they're saying about 2020?
I don't know. No.
It went viral faster than anyone thought it would. Okay, listen, there's a funny joke. If you don't like that joke, I'm sorry. But give me some thumbs up if you guys like that joke there. That'd be really helpful. If you guys can give me some thumbs up, some comments, some pounds. And if you don't like it, give me a middle finger. That's okay. I see those as well. Huh? That was a dog joke. Yeah, some pounds. Look at that. Ben's having so much fun. Appreciate you guys in the comments. By the way, thank you for being here on the comments. Love that you guys are enjoying this because we're having a lot of fun here. Here we go. Here's some positivity, some likes. Send me some love, y'all. Don't be sitting at home on your couch and not laughing. This whole thing's about laughing. Let's hope to our next segment, which is the data and drama segment. Hit it, Vin. All right, here we go. Data or drama. This is the part of the show where we talk about, is this data or is it drama? I want you guys at home to participate with us and give us a thumbs up if it's data. Give us a thumbs down if it's drama. Okay, here it goes. The first one. If you lose your sense of smell or taste, this could be the first sign you have coronavirus, even if you're asymptomatic. Is this true or false? Data or drama? Let us know at home. Come on.
Drama.
What is it, guys? What it?
Drama.
Data or drama? It's actually data, okay? Lost sense of smell may be peculiar clue to coronavirus infection. Doctor groups recommended testing and isolation for people who lose their ability to smell and taste, even if they have no other symptoms. Well, depending on how well your mother-in-law cooks, you might have lost that a long time ago. Not my mother-in-law, because she's amazing. All right, moving on. California man starts a street corner toilet paper exchange. Also known as the Bowel Jones exchange. All right. Is this data or drama? I want to know. Data or drama? Matt, you venture to take a guess?
This seems plausible, but I don't know, to be honest.
It is California after all. So you want to take a guess?
How much is a roll?
If I had to guess, I would guess yes, unless there's a lockdown and they're not allowed out.
Okay. This is actually data. California man starts street corner toilet paper exchange. And since he does... so let me see. Disturbed by empty store shelves and reports of hoarding during the coronavirus, a man stood on the southwestern corner of the street holding up a homemade cupboard sign with a simple request: share your toilet paper. Johnny Blue told the San Diego Union Tribune on Saturday that the response to his impromptu toilet paper exchange in Encinitas was immediate and positive. Drivers honked their horns in support and stopped to drop off rolls of toilet paper. So just as quickly, Blue would hand rolls to those in need. So there is an actual toilet paper exchange. The only problem is we need to make sure that it has been sterilized. All right, and last but not least, data or drama, vodka can be used to make DIY hand sanitizer for those of you folks in AA. Is this data or drama? Let us know in the comments. Thumbs up, thumbs down, let me know. What is it? Is it data or drama? Matt, can we use this to make hand sanitizer?
How strong is your alcohol?
Okay, vodka, I don't know. What do you think? Well, the answer is... that's drama. People keep threatening to replace hand sanitizer with vodka. Tito's begs them to stop. Tito's vodka, which I don't know because their stock would actually go up if everybody bought this for this purpose. But per the CDC, hand sanitizer needs to contain at least 60% alcohol. Tito's only has 40. 40 still seems like a lot. I don't know. I don't drink Tito's, but it seems like a lot. Am I right? Okay. And therefore does not meet the current recommendation for CDC. So please don't get hammered on Tito's and just assume you don't have the virus. Fair enough? Matt, fair enough?
Yep.
All right, beautiful. Well, moving on to the next segment here. So, folks, so good having you on the show. Appreciate you guys for tuning in with us today. Again, grab your free copy of Real Estate Secrets Exposed, book on Canadian wholesaling that we put together. It's as Canadian as Timmy's, who is not paying me any kind of endorsement or sponsorship. I just like the coffee, so I drink it every day. Head over to humble.ceo. And as we wrap up this episode here, Matt, any parting thoughts you want to give our viewers today in relation to the future moving, let's say, real estate market? Should people get invested right now? Should they wait on the sidelines? What should they do in this time of, let's say, a pandemic?
Yeah, great question. So certainly, I think everything should be viewed through the lens of data and avoid drama wherever possible. Beyond that, investing for fundamentals is always a wise decision. So if you find yourself being emotional, I don't think that that's the time to sell or buy. So it should really be driven based upon fundamentals and data, and then really understand and appreciate the fact that our information cycle is so fast evolving at this point in time that, again, if you're going to be acting, whether it's to buy or sell, you should be trying to gather as much information and data as possible to help you make a better, more informed decision, and make sure you're acting upon recent data and don't simply rely on 6-month or 1-year-old data.
I love it. Let's go to the question side real quick. Got a few questions we'll take in the Q&A segment here as our next one. Wrapping up our Q&A here. We got a couple from the folks at home. Let's see here. We got quite a few comments today. By the way, don't forget to win that money and share. And today we're going to be winning that special Zoom call that Matt and I are going to be doing on your personal finance situation. I love the deep dive, exactly what you're doing today, give you some practical advice in this kind of economy, whether you should buy, you should sell, on a personal one-on-one call that we'll be putting together in the next couple of days here. So first question comes from...
Justin's asking, he wants to learn more about real estate investing. Where can he get started?
You want to learn more about real estate investing? Well, first thing I would do, guys, right now is that it's never been more important than to invest in yourself. A lot of people are trying to buy stocks or equities or things that they have no experience in. It's a very important time to focus on getting counsel from people that have actually done what you aspire to do. So one thing you can do is join our community at cashflowtribecanada.com. It's a community of real estate investors in Canada. I think we're the fastest growing right now. You can join us over there. Get educated, get around other people doing deals. We're all over Canada. And I would start with that. So Cashflow Tribe Canada, maybe the guys can throw it up on the screen when they get a chance. Head over there, check it out. We've also got a Facebook group, Cashflow Tribe. Just head over to Facebook and check that out. But I would start with getting around the right people, getting the right information, get around investors that are doing actual deals, get mentorship. Right now, for me, it's important. I belong to a 50K a year mastermind group, and it's important to me to belong and get around people that are doing real business right now, because the last thing I want to do is try to guess and take people's advice that don't know any better. A lot of friends and family are going to be telling you about how to invest, where to invest. The truth is they don't even know where to invest, but yet they're giving you investment advice. When your stock market's dropped so much lately and you've lost half of your portfolio. In fact, I talked to a multimillionaire today and he says that he's lost half of his wealth in the stock market in the last week. Dude, that's tough. So get around people who have access to deals, access to capital, access to the actual information for how you can invest. My favorite method is real estate because it's tangible, it's slower moving than other asset classes, and it's got intrinsic value. So intrinsic value means that basically there's a cost in the raw materials to produce this thing, whereas a lot of the equities that are trading in the stock market, even though the price may seem cheap and you see it drop 50 cents on the dollar, it's probably still trading at many times what it's actually worth, because that's how the stock market works. Okay. Anything you want to add to that, my friend?
Nope. It's been a really fun show, though. Definitely enjoying all this.
Okay, we'll take one last question, then we'll wrap it up here for the day. Vinny, bring that last question here. Hans, where's that question?
Okay! We got a question here saying, any thoughts on using LMR deposits for current rents versus LMR if tenants need?
One more time, pull that up again. Using LMR deposits. Here we go, from Book Johnson. Any thoughts on using? Matt, why don't you take all this one here?
Sure. So Brooke asks, thanks, guys. Also, any thoughts on using last month's rent deposit for current rent versus last month's rent if tenants need? I have a great relationship with my tenants and we can't use for damages, etc. anyways. So wondering thoughts on negative repercussions of this, if any. Yeah, it's a great question. So I guess the biggest note I would make is this isn't going to impact your cash flow in any way, right? They've already paid that deposit. So I suppose if you've been holding it in like a separate account or a trust account, then it certainly can make sense to apply it so that you can have access to that cash and capital. I suspect that a lot of small landlords probably don't keep a reserve with last month's rent. So for small landlords that are in that situation, it probably won't really move the needle one way or the other. So I would in general recommend against doing it. But if you're currently holding their last month's rent deposit in in a checking account or a savings account, separate from the funds you use to fund your real estate investing, then absolutely, I think that that's an interesting strategy that might help you smooth any cash crunches that you experience if we do have large scale tenants having trouble to meet their rent obligations.
Something important to just keep in mind here, folks, the way that I kind of evaluate this is it's a very individual question. Giving you a broad answer on like what to do and how to do is going to be difficult because we all have different resources and abilities and liquidity options available to us. So what I would tell you is evaluate what you have in resources in terms of capital. Who do you know? What do you know? And use those wisely. It's a time to be financially and fiscally responsible for what you have. And one key thing that I want to leave you with is this. A lot of times in business, a lot of folks are very transactional, meaning that all they do is they get their payment, they get their money, they do the deal, whatever it is. But we fail to really spend time and build relationships with people, whether that be our tenants, our lenders, our investors, people around us, our realtors. We fail to really invest in those relationships. And these are the trying times when it's obvious that we haven't made that opportunity available to us. Where I learned a long time ago from a mentor that I'm a part of, and being very honest with you folks here, all jokes aside, invest in relationships and invest in people. Because what happens when the market takes a nosedive like this and there's uncertainty in the market, those relationships, you can actually lean on those. So those relationships that you built and built confidence with, you can actually lean on those to go and get more money, to get help, to borrow from, to do deals with. Like right now, the groups are getting smaller of the deal makers because it's the same people who have done deals for the last couple of years that are going to be doing more deals together. Nobody really wants to take a chance on somebody new because there's so many issues. I heard that the appraisers are no longer appraising. So some folks are closed down. Some folks are staying open as an individual preference, which means that in turn, banks can't fulfill closings because they don't have any appraisals to property. There's an uncertainty there. I don't think that we're like whatever the LTV is that we're getting now on new purchases, I think that might actually drop in the future. So if you were getting 85% loan to value now, the bank may be bringing that back to 80 or 75% loan to value. That's how they hedge their bet, is having you put more money down. And even though they've opened up liquidity by doing a stimulus deal, basically infusing capital back in the economy, that doesn't mean necessarily that's going to be accessible to you. I think the way that capital works is that it's primarily going to go to the people that have proven competence in the past. So my experience in 2008 was that the people that were doing a lot of deals did a lot more deals. The people that had confidently built relationships with other investors and pool of buyers and et cetera were doing more deals as a result of 2008 because they were prepared to capitalize on the opportunity. So if you haven't taken the time to build relationships, now is absolutely crucial. And if you miss this moment, if you miss this opportunity to build relationships, please start today before we have another crash. Because frankly, we move in market cycles. And as much as this seems very difficult and hairy and scary in the moment, it probably won't be the last market cycle, won't be the last crash. So really, I learned this from my mentor. If I can give you one piece of advice today that I paid 50 grand for, it's invest in other people. Matt, I know you're doing a great job with this. Matt's jumping on a phone call with everybody that he knows, who has respect for. He's getting advice and counsel from them. He's building those connections. It's important to show support to the people that you've built a relationship with. And if you failed to build a good relationship with your tenants, it's never too late to start, folks. It's never too late to just say hi. You know, we obviously want to provide you with a, affordable, healthy place to live. We need you to pay your rent so that obviously if you don't pay your rent, the amenities are going to fall. We can't pay our bills. We can't pay our things. My point is, don't just defer the problem. Even if you defer the payment, don't defer the problem. It's ultimately your responsibility to be accountable for yourself, to take action, and to really invest in people around you. And I think, Matt, you could concur with that because, Matt's a very relational guy. And, I kind of watched him over the years, and I had a lot of respect for you for doing the same thing, is focusing on investing in people. People will get people through this. Not a program, not a government. No, you can't wait for somebody else to feed you. You have to do it yourself. Trust me, I come from communism, folks. You can't rely on the government to just fix the problem. I'm sorry, you can't. Okay? Not without having some undue consequence later on that maybe you're not willing to make that trade next year, even though today it may seem worthwhile.
Yeah, 100% agree with that sentiment. I think that was perfectly worded, Ben. So I think it is important in times of uncertainty. If you're concerned, you should be reaching out to people and seeking counsel. Again, there's a difference between counsel and advice, as Ben always likes to say. Counsel is someone that's been there, done that really has a real perspective. Advice is just someone's opinion, and it's worth essentially that. It's worth nothing. So I think it's important in these times to be reaching out. At the same time, everyone's position in these uncertain times is different. So if you find yourselves in a good position, I think it's important to make yourself available to even just be a sounding board for those that are struggling. Wow. So I know in startup culture, there's a term called WIFIO. And so for those of you that aren't familiar with it, what it stands with is like when a startup's panicking about some obstacle they're coming in, it stands for we're effed, it's all over. And while I know entrepreneurs will often feel that, it's important to understand and really get real perspective. Is it really that bad? So if there's any, entrepreneurs, any landlords on these streams that are currently struggling with maybe an idea of WIFIO, I'm more than happy to be a sounding board. So feel free to DM me on Instagram or Facebook, and I'll try and do my best to just chat and listen to everyone. Because again, I know there are people that are very tight in these circumstances. And so if you need to just have a sounding board or get some counsel, I'll do my best to help.
I love that. And Matt's contact information is on the screen now. Follow him on Instagram. Check it out. By the way, if you're not following Matt on YouTube, he drops content every day. And you need to be following this dude on YouTube. He's been putting out over 500 videos. So appreciate you guys for joining us. Now is a good time to love on somebody. So just, that whole pay it forward movement, I think is amazing. I pulled up to the drive-thru the other day and somebody inside paid for everybody's drive-thru, which was awesome a couple weeks ago, just before the thing. And it felt awesome to know that other people are still making a massive effort. So just do something kind for another human being. We're all struggling in a way. We're all, some of us more than others, financially, emotionally, spiritually, mentally. So just invest in somebody else, show some love, because you only have two options, face this thing with courage or face it with fear. Those are kind of your two options. I choose courage. I hope so do you, my friends. So stay focused, stay humble. Thank you so much for being on the show today. The Data or Drama Show, live every weekday at 5:00 p.m. Hope to see you guys there. Thanks for your comments. We'll see you guys tomorrow. God bless and stay humble.
Thanks, Ben. Thanks, everyone.
Thank you, Matt. Appreciate you, buddy. Have a great day. Let's get some tracks down.
What up?
Yeah.
What up? What up? What up? What? 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 What?
Yo.
What?
Yo, let me drop that freestyle for my boy again. Yo, McKeever's a believer that I'm as dope as Bieber, while my hair's a little thinner. I'm eating fast sticks for dinner. Retired CPA, doing real estate all day. Matt's crushing YouTube in every single way.